Good evening, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to tonight's special session of Parabolic Retracements. So this is actually one of my favorite strategies that I really enjoy trading, and it's something that it's one of those things that I was really excited to be able to share with people. It absolutely, without a doubt, matches up perfectly with Nadex, and yeah, it's just one of those things. I can't tell you how much it just literally. It is my absolute favorite thing to trade with a combination of Nadex. Many of you know me as, from some of the other programs that I've done, but news trading is one of those things that's always been near and dear to my heart. So very excited, glad that you guys are with me this evening. And again, let's hopefully you guys are able to get some type of a gem out of this. And I also, for attending tonight, I do actually have a free special report for you guys that you're more than welcome to download. It doesn't cost anything, it's free for you guys, and that's at the end. I'll shoot you guys a link for it. And hopefully that will help you in your journey, adding this trading style to what you're already currently doing. So before we begin, let's make sure, and let me go in here and let me see if, let's see, will this scroll for me? Yeah, there we go. All right, so I'm gonna give you two different disclaimers real quick. One will be for Nadex, okay? This is the first one. Now, trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including forex, stock index futures, and commodity futures. Now, trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures that investors cannot lose more than the cost at the end of the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Okay. Now, with that being said, this is just a standard overall one that we use for Keep Trading Simple. And it's very simple. Again, no representation is being made that the use of this strategy or any strategy or trading system or methodology will generate profits. Past performance is not necessarily indicative of future results. I'm going to skip down a little bit. Only risk capital should be used to trade. Okay, basically, do not use the milk money. No mortgage money for trading, just so you guys know that. With trading comes risk. Okay, no representation is being made that any account will or is likely to achieve profits or losses, similar as discussed on this during this webinar. And again, past performance of any trading system or methodology is not necessarily indicative of the future results, as well as the rule 4.41. All right, so with that said, let's just jump into it right away. All right. So, I see some people asking some questions out there already. Good evening, everybody. And I already got guys looking for tickets. All right, so for those of you who don't know me, if this is your first time attending any of my webinars or online classes, I'm the president and CEO of Keep Trading Simple. And I've basically been trading since about 2000, 2001 time period. And my mission is really to help simplify what trading needs to be, or what it can be. My belief is a lot of professionals out there and gurus and experts, and they try to give you a lot of different indicators, and they make trading extremely complicated. Okay, so for me, my mission is to really take us back to really the basics, understanding what happens inside of the markets and using that to your advantage to do basically more or less what the big money does. And where does that knowledge come from? It's not self-created. I've not only taken the retail trader path and learned through different courses throughout the years, in-person ones, different colleges, different systems, but then I actually was a financial advisor for a few, basically a short time, about a year and a half. Realized it was nothing like what I thought it would be. I figured I would learn so much more about the markets and trading, and I learned none of those things. Got my licenses, my Series 7, my 66. I realized that I wasn't even supposed to look at a chart ever, and I wasn't allowed to talk trading, and I was like, this is not what I wanted to do. And ended up getting out and teaching people to trade. And when I changed that career and went to the teaching aspect, I was very, very lucky that I met some market makers. And I can tell you right now, completely changed my opinion on trading in general. Like looking at it from the, I'm a retail trader, I'm playing against the big boys, to being on the inside, seeing what the trading floor actually looked like for these big banks, the people that are moving the markets, to then learning from the market makers how they used to manipulate the markets back and forth, and again, in a legal way. And again, seeing what they did, oh, there's definitely buyers here and there's sellers here, and I'm gonna move price here, and then they'll do just absolutely amazing. So what I've done is I've taken all that data and I've created a number of different strategies. You may know me from the 30-minute trader program, as well as 5-minute binary courses. There's actually now a Parabolic Retracement course as well that's in the process of being released. But again, for me, I absolutely love this strategy. One of my absolute favorite ones. So I can't tell you, I'm very, very excited to share it with you today. I will say too, I'm very proud of that little girl down there at the bottom. She's actually in the other room. She only says a few words, but Dada is one of them, and she's unhappy that she's not in there with me presenting today. She's a big fan of trading. She already gets out here and she likes to point at charts with me, but so she's here in heart, but I want to make sure that I give her a big shout out because I told her I would mention her on stream tonight. All right. So let's cover the agenda, and we'll go through what we're going to cover tonight. We're going to take I'd say about 30, 35 minutes. Not too long tonight. I'm actually going to jump off and do a little bit of chart analysis for group later. But what we're going to do first is we're going to find what is a parabolic move. Okay. Before you can trade a parabolic retracement, you have to understand exactly what it is. So we'll go in there and we'll define that. And then we'll talk about why do we trade the retracement. Okay, very important kind of section, and very important to understand it. Can you trade the news before it's released? Yeah, absolutely. But this is about trading the kind of retracement or kind of the rebounding effect from news releases. And that's why I love it so much. Then we're going to discuss when it can be traded. Okay, I know some people have full-time jobs, you live in other countries, doesn't necessarily matter. I'm going to give you guys an easy system to follow to figure out when these news releases are going to happen, of when you need to be in front of your computer. And in fact, even with a full-time job, you may be able to trade some of these at your work. I don't know how many of you out there are using obviously the online Nadex platform, but you may actually be using, the one on your phone as well. Again, you kind of have ultimate mobility options these days with things, maybe even on a tablet. All right. Then we're going to cover which assets you can use to trade them. You may be surprised. Again, I'm primarily a currencies trader, but again, I use this strategy to trade all different asset classes, and we'll cover that. And then we're going to talk about why you would choose an out-of-the-money contract. Okay, this is a great question because, again, a great section because a lot of people aren't really sure, especially with Nadex. If you come from some other backgrounds, you may be confused about the at the money, the in the money, the out of the money, and understanding the pros and cons to those. And again, one of the reasons why I'm using out of the money here is because it matches so well with the strategy and so well with what's happening at the time. All right. So with that being said, let's see if we can drop down. So let's talk about a parabolic move. The best way to explain what is a parabolic move is kind of like if you're looking at a chart and you all of a sudden think to yourself, what just happened? If price just takes off and goes crazy and starts moving, well, you probably just hit a parabolic move, okay? It's very simply. So the definition of a parabolic move is an explosive one-directional move in an asset that is exponentially greater than the average move during that time frame. It'll often look like panic buying or selling, and is most times associated with a major news event like earnings or a news release. Sure, there are times where prices will just all of a sudden take off, but there's typically a reason why. Now think about it. Why do prices move? It's because there's an imbalance in buyers and sellers, right? If there are two people wanting to buy and two people wanting to sell, price doesn't move. But what happens when 10 people want to buy and only 2 people are selling? Okay, those sellers, if they're smart, they're going to start raising the price, and that's what causes prices to move. And same thing, if you're trying to sell something, right? But your neighbor's selling theirs, and then the other neighbor's selling theirs, and the other neighbor's selling theirs, and there's all these people selling, there's only a couple people buying. What do those sellers have to do? Okay, they have to lower the price until they can entice a buyer to step in and try to undercut their, I say opponents, right? The other neighbors, right? Well, that's the same thing, okay? Typically with news releases, because of the reactionary kind of response, right, to the news, people are either trying to get in or people are trying to get out, okay? And again, a lot of that is big money kind of manipulating the fact that, hey, listen, hey, you want to buy this? I'm going to sell it to you, right? And again, that's why the retracement aspect of this is so powerful. So that's typically what defines a move. Now, I will tell you this. There are a number of different ways that we can do this. I would say, again, this is one of those things to write down here. For me, what I would define as a parabolic move in any time frame is if you're using about 1.5 to 2 times what that period's ATR is. Now, you may say, what the heck is an ATR? Well, ATR is a standardized indicator. It's on almost every single trading platform. It's basically taking an average over 14 periods of whatever you are, would it be 30 minutes, an hour, daily, weekly, monthly? It's taking kind of the top bottom, there's different versions to do it, but it's basically taking the average move that happens during that time period without getting too difficult, without getting too complicated on you, right? You'll see things on a 30-minute time frame that, some of the currency pairs that their average is 6 pips. And what that says is in that time frame, the average move is about 6 pips, okay, per kind of chunk of time, all right? So with that being said, that's kind of the definition, all right? So question is, what does it look like, all right? Let me click down to the next chart. Here we go. So basically what we are is we're looking at 2 different time charts, okay? It doesn't matter what they are. It's more or less just going to show you kind of what's going on during those time frames. Now, all of a sudden, you guys can see right here, if you guys can see this, what happened? There's all these little kind of candles, and then all of a sudden, what happened? Boom, right? An explosive move with huge extended bodied candles, right? Very, very large, okay? Well, what happened is that's news, okay? Very simply, that's news, all right? Now, looking at the right-hand thing, what happened here? Same thing, price rally, little bit bigger, right? Little pullback, little bigger, and then boom, all of a sudden, what happened? This same type move to the downside. Now, again, this happens all the time with news, right? Think about earnings. Like what happens? Say everybody knows what Apple is, right? I'm not a huge fan of Apple, but you know, everybody knows what Apple is. If Apple all of a sudden, again, even after hours, if Apple all of a sudden comes out with the iPhone super triple gold, whatever, it's a secret release that nobody knew about, it's going to change the world, right? It will do everything you need to do and cure all your illnesses and et cetera, right? What's going to happen to that stock as soon as people hear that? That thing is going to explode. It's going to go crazy and go straight up in the air. Well, that's a parabolic move, right? Okay, that happens all the time. Almost every single day you have one of those moves in the market. It's not just things for earnings, right? It happens every single day. Well, here's the thing. I use currencies because, again, world markets are something going on every single day. But this is what a parabolic move looks like, okay? Again, do these large candles look like they're moving 1.5 times to 2 times what the average candle is moving? Absolutely, okay? Now, what is it doing? It's retracing back to the origin of the move, okay? Now, with that being said, let me show you kind of what it looks like in practice, okay? Here was something, and this was from September 12th, okay? Now, as I mentioned before, parabolic retracements typically happen around news, okay? Now, some of you may or may not be using these, but this down here, if you look in the bottom right-hand side, when we're talking about contracts, this is a euro-pound contract. You may say currencies, I don't really care. Well, you should. If you like making money, you should absolutely look at currencies, okay? It's the largest market in the world. Well, Nadex has different kind of strikes, different type of strike time frames, and it gives us some kind of advantages, and this is why it's very, very important. So if you're looking at this, what was happening is at 7:45 a.m. Eastern Standard Time, we had the main refinancing rate for the euro come out, as well as a monetary policy statement. Now, if you look over here, it's kind of hard to see, but you can see that right here where my cursor is, not the one that's in the picture, but the one that's moving. Here's 8 o'clock, here's 7 o'clock, and you'll see this spike that occurred right here, okay? Well, that spike occurred because of this 7:45 release, okay? 8:30, the ECB press conference didn't happen until here. Now, do you have to know what the main refinancing rate or the monetary policy rate statement is? No. Do you have to know what was said at the ECB press conference? Absolutely not. Okay, but this is what I do know. I know that because of this news at 7:45 in the morning, there was an explosive move that jumped all the way down here, right? We went from 89.50 all the way down to 88.90. It basically dropped 50 pips in a matter of 15 minutes. Now, maybe you don't have any idea what pips are, and that's totally fine. You don't need that for today's discussion, but look over here at this contract. This was a 2-hour binary contract. You can see, again, we're talking about those 4 digits. Well, here are those 4 digits as well, okay? And one of the things about kind of doing things out of the money is the risk level associated with it. But look how many strike prices, okay? We're talking about a 50 pip move. Well, take a look over here, okay? Here's 1, 2, 3, 4, 5, and almost 6, because it actually went a little bit more than that. So it moved 6 strike prices in 15 minutes. Okay, pretty exciting, right? Now, do I care what they said here? Do I have any idea what they said here? Absolutely not. Now, what am I looking to do? I'm looking for the retracement. So step 1 of this is always finding, is there a parabolic move? Is it associated with news? Yes, absolutely. It shot all the way down here. Then it started to retrace a little bit. The second bit of news stepped in, went right back to the same zone, and then we started the retracement. all the way back up again. And what did it do? It came all the way down here again. You can see price was down here at 88.90, and it rallied all the way back almost to 88.50. So went about 60 pips in the opposite direction. 6 strike prices. And again, here's the 10 o'clock figure, right? So from 8:30 to 10 in an hour and a half, we moved 60 pips back in the upper direction. And this is why I love this strategy. Okay? Absolutely love it, because this happens all the time. Okay? Now, you may be asking yourself, why trade the retracement, Brian? Why not trade the news? I saw you had a little green box over there. Why couldn't you have just done that? Well, the answer is I could have traded that, right? It's possible I could have traded it. I actually do have strategies that I will trade. You guys may have heard in 30-minute Trader, the news breakout strategy. I actually have other strategies that I use, particularly in currencies, for actual news releases. But here's the thing. At the end of the day, if I'm trying to guess what the news is, right, I can do it. Again, I can't do it on every single news release. There are certain technical setups where I can trade the news beforehand, but there are some that I absolutely can't. If I'm trying to trade them without it having being a technical setup, I'm literally looking at I'm kind of guessing. It's like a crystal ball. Like I think it's going to do this, but I don't know. It's not based, my technicals are not lining up. Playing the retracement shows me that not only was there an imbalance in price, there was a reactionary move, there was emotions involved. Okay, whenever emotions get involved in the market, typically retail traders are losing money. Okay, big banks, institutions, large money out there, they don't care about emotions. They just care about making money. But typically, if you see price moving very, very fast, there's emotion involved in it somehow. And again, it's retail traders that are going to lose money in that position. So again, by waiting for the retracement to really start, right, for this big spike candle to go away, what it does is it's increasing my odds. And again, pairing that with something like Nadex, again, helps me lower my risk in these trades as well for any type of retracement. All right. So again, could I trade before the news? Sure. Is it a better and most likely probably safer opportunity? Because again, even if it is technical setup, the news may be a surprise and I could technically be wrong. Sure. But in a retracement, again, there are certain rules that I want to follow. I want it to go to a specific area. Most times I can predict where it's going to stop, and that's where I want to be able to get in. Okay. You just don't pick a random kind of strike and say, here, I think this is going to retrace. Obviously, it has to be, turning around at a specific, kind of predefined level that you're looking for. All right. Now, how do you find it? I said before, well, there's many different news sites you can do it. Okay. Daily Effects, I'm sure you guys are familiar with that. This is one of them. They have an economic calendar. Now, Forex Factor is another one that is extremely popular for economic news releases. It lists them from all the countries out there in the world. MyFX Book is another one. So there's multiples, and the data is basically the same. They will all give you some type of importance level, right? They'll tell you what the release is, what time the release is going to be, what it is. They'll show you the importance, okay? Then they're going to give you some other important data. Okay, they're going to give you what the previous was, what the forecast is, and what the actual is. Now, the forecast is extremely important because that is what the market has already priced in. Okay, let me give you an example. If you're supposed to have let's just say there's a rate cut coming up, okay? If the market is forecasting a rate cut and the rate cut happens, the market's probably not going to move that much. Why? Because the market already expected it to happen. The market has already priced it in. Some guys, you will hear this sometimes of people saying, hey, listen, that's priced into the market already. And that's what it means. There's experts out there, there's analysts, there's computer models and generations and all this kind of stuff. And they're generating all these models and they have a forecasted number. Now, it's kind of like the weathermen. The weathermen try to predict things as well, but sometimes they are wrong, okay? When they are wrong in their forecast, that's when these things happen. And you can see just in this example right here, you can see that the unemployment rate in Canada, obviously they were off by 3. They expected it to be 5.7 and instead it was 5.4. So they were off by 0.3%. That's a huge amount. Okay, that's a big amount. That's a big drop. Okay, and that's going to lead to a really nice bit of movement, right? Same thing. Change in non-farm. They expected there to be 175 jobs, right? There was only 75. So that's a big difference as well. Okay, so these things happen all the time. Now, how do you know how often they miss? Well, I mean, you have to do your research on that one. The free report that I told you guys about at the end, that has a lot of this information, and that's why I created it for you guys. But again, these websites, they're absolutely free to go to. You can check these things out. Always look for the high importance ones as well, okay? Now, with that being said, when can I trade them? Whoops, I clicked that one too quick, okay? So when can you trade? Because again, what a lot of people will say is, I work full time, I commute, I'm on the train, I live on the West Coast, I live in Australia. And the question is, it doesn't matter. How often, I mean, think about it. When do news releases happen in the United States? Typically in the morning time, right? 8:30 in the morning, 10 o'clock for some of the ISM numbers. Well, when do the European figures happen? Well, typically 3 o'clock or 4:30 a.m. in the morning. Why? Because that's the London Open, right? That's their early morning. And then think about Japanese numbers are at night and Australian numbers are at night. So technically speaking, news releases happen 24 hours a day, okay? Now, let's look at the native Forex hours here. Again, if you're not familiar with Forex at all, this is a great little mini lesson into Forex, okay? The New York, or the session that most of us are used to, most of us are from the United States, is open from 8 a.m. to 5 p.m., right? Again, sometimes, some of the markets close a little bit earlier, but for the most part, the Forex hours are from 8 to 5. And again, with daylight savings time and everything off, if I'm off an hour, you guys got it. UK is already out, we're still in, we go out this weekend, right? So Tokyo, again, is 7 p.m. to 4 a.m. Eastern time, right? Sydney, 5 to 2, London, 3 to 12. So you can see there's a lot of overlap. So news releases happen all the time. Interesting enough, I just mentioned like the European Union in the UK, a lot of those releases happen at 3 to say 4:30 in the morning because that's their like 8:30 to 9:30 a.m., right, our time. But sometimes they have releases at 7:45, 8 because that's the end of their business day. Kind of like how all our earnings come out after the end of the day. So think about it this way. If this is something that you've never traded before, maybe you have to wake up early to catch some European releases. Great, you can do that. Maybe you live on the West Coast. Maybe you're going to stay up to midnight so you can catch some news releases. Great, trade it. Maybe you're an East Coaster, and again, you want to trade before you go to bed. Well, guess what? The Aussie figures are at 9 p.m. at night. So again, there's definitely time for you to be able to trade this strategy or strategies like this 24 hours a day. Okay, obviously not on Sundays because the market's not open, but I say but, nothing to trade on Saturdays, but guess what opens Sunday night at 5 o'clock? The Australian market, because it's Monday morning over there. Now, session overlaps are extremely important. Okay, the most volatility in things typically happens with New York and London overlap between 8 a.m. and 12 noon. It typically starts to go out a little bit earlier than that, I'd say about 11. So typically it doesn't last until 12. But then you have the Sydney-Tokyo kind of overlap, and then you have London-Tokyo from 3 a.m. to 4 a.m. That's an amazing time to trade, but I'm an East Coaster, so it's not really the most convenient for me, right? Because that's 3 o'clock in the morning to 4 o'clock in the morning. I mean, who necessarily wants to be up then? Not that you can't, but I like my sleep. But if you're a West Coaster, what time is it for you? It's midnight. Maybe you don't mind staying up till midnight, right? You can take advantage of those things. All right. Let's see. What about news? We got one question over here. It says, what about big news or big events that occur at expiration? I assume you don't take that trade. Well, here's the thing. Okay. One of the things I'm looking for, and again, great question. You just have to make sure that you're choosing the right strike for this, right? I mean, if you're choosing something that expires at the time of news release, you're not taking advantage of the retracement, right? You're kind of basically over. I mean, you're done before the news. That's kind of a pre-news piece of it, right? And again, Nadex, especially for currencies, there are 2-hour trade setups. There are 5 minutes, which I don't recommend for this strategy, but there are obviously the 2 hours. There's the dailies. There's spreads actually you can use from that even have 5-hour and 8-hour spreads. So Nadex is amazing because it gives you a million different ways to be able to trade these things, okay? But the point is, you need to make sure you give yourself enough time for the trade to work, right? So if you pick something that expires just as the news release comes out, that's obviously not going to work for you because, again, it's going to take a little bit of time to retrace. So hopefully that answered your question. But it was a good question. I do appreciate it. That is a good one, all right? So session overlaps are always going to be important, all right? Now, which assets could you trade the retracement with? Okay, well, this is pretty simple. All right, I'll give you the first one, right? First one is forex, of course. Forex is a global market, okay? I know a lot of people are scared of it. They're like, oh, it's overseas. I have no idea. You don't need to. You just need to understand that, again, we have huge releases here. There's things like non-farm payroll, GDP every country does, retail sales, manufacturing numbers, consumer confidence. There's a lot of the big boys out there, and every country uses them, okay? There are other economies in the world. So Forex is the ideal ground because, again, there's so many different news releases for that, right? Now, number 2 with Nadex, you can use indices, right? Nadex is kind of cool because we can trade indices from other countries as well, along with ours. Now, again, obviously US releases are going to be based off our indices, but there are other news releases that are released that you could trade other things. Maybe you've never even looked at that tab or looked at them and only said, I'm only trading the US ones. But there are other things out there that are tradable as far as indices wise. And last but not least, what about commodities? Every single week we have an oil release, right? It's either Wednesday, or if we have a holiday, one of the beginning days of the week, it's moved over to the Thursday. But things like oil you can trade. Not that it's here anymore, but I used to trade, soybeans over here on Nadex as well for the same type of retracements. Okay, it doesn't necessarily matter what it is. Okay, if you have a strategy that is good, it will work for everything. And again, Nadex is again. I hope I'm not beating a dead horse on this one. Nadex lets you trade all these in one platform, and again, it's why it matches so perfectly well. And I was so excited they invited me to do this presentation here because, again, I can trade forex, indices, commodities, all in the same thing. The news releases are exactly the same, and the same type of retracement setups happen all the time. Okay. Now, big question I always get: why do I use out-of-the-money contracts? Okay. Think about that. There's a big benefit to using an out-of-the-money contract. Okay. Now, some people prefer at the money, and that's totally fine. Again, this is just my opinion on this. Okay. Some people prefer in the money, which again, I just can't jump behind that one. But for me, the reason why I use out of the money on this one is because obviously there's been some crazy movement because of this news release. And again, it could be followed up. I mean, think about this. There could be absolutely great US data that comes out, right? 15 minutes after that, the strategy's rolling, it's moving. And then all of a sudden, what could we get? We could get a tweet, right? You guys been in the markets when we've had a tweet? What happens when we get a tweet? The market goes absolutely bonkers, right? So again, if I'm using it out of the money, what does it give me? It gives me better risk, right? Because again, if I'm buying into something, I'm not paying as much money. So what does it out of the money look like, just to make sure that everybody's on the same exact page? If you guys look in this top section here, you'll see the indicative value is at 3011.25. Well, if you look across, you can look to this side and see right here, 3011.25, this 2:20 p.m. This is a 20-minute binary. You can see that's at the money. And how do I know? Because again, the bid offer is right around 50 bucks, 47.25 to 50.50, right? Now, as you go higher, what happens? The cost to enter the trade goes down. So this 27 is obviously out of the money because again, it's a binary that's at 3011.75, which is obviously higher than the indicative, right? And there's one for 13 and one for 5 and one for 3. Now there's only 9 minutes left, but again, this is a 20-minute binary, so only half the time is expired. Okay, but I just wanted to give you guys this as an example. Same thing. Let's look at the bottom. This is the Aussie dollar. Okay, now this one again is a 2-hour. This one has an hour and 50 minutes, so it's a little bit closer. But you can see the indicative value is at 70.19. Okay, well, there just happens to be one of these over here at 70.18. It's pretty close. It's a little bit higher, right? It's 1 pip higher, so it's a little bit above 50. But what happens when I go up here just 4 pips higher? 26.25. Look at the difference in risk. So if I bought into the contract, the most I can lose on this trade is the 26.25 plus the fees to enter the transaction, which is 1 per contract, right? And what happens if I go a little bit more? So this is technically 8 pips, right? 8 pips in 2 hours. And if you guys remember back from the beginning, how much did I say that first kind of trade example moved, right? In that hour and a half from 8:30 till 10, it moved just under 60 pips. Well, to see how the out of the money worked really well here, we went from here where the indicative is right below this one to where if we go just 4 pips higher, look at the difference in the risk. Risking $10.75 plus fees versus this one. So do you guys see the power of the out of money in this one? Okay, and again, you got to understand the biggest thing is you need to make sure that you're at an area where we're having a confirmation of a turn. Okay, and again, that's not really what today's kind of discussion is about. Today's discussion is about really explaining the strategy and how the setup works. So obviously you need to make sure that you have a strategy where you can determine where more or less tops and bottoms are. And again, for me, that's reading price action and reading supply and demand. Okay. Again, beyond today's kind of piece of it. All right. But I want you guys to see that. Now I'm gonna scroll back real quick. Let's go back and I just want you to see that top one more time. Let's go back. Go all the way back, and I want you guys to see that one more time on the chart, just to make sure that you guys understand what we're talking about. Okay, so remember, out of the money would be above. At this point, it's already moved a bit. We've already kind of pulled back up again. Whoops, there you go. But look at this, from 8:45 in the morning up until 10, from here, if you guys can see this, to here, 60 pips of movement. Okay, now On this one, you can see that the strike differential is 10. So we moved 6 strike prices higher within that time frame. Now again, this one only has 2 minutes left, but you guys can see the difference. In the spike, if you got in down here, right, you were looking to get in. It's one of these two is where the bottom of this thing was. But you can see, had you gotten into one of these two, right, even if you use an APTA money, look at the difference of trying to get out of them. Okay, you guys can see the difference, right? Even if you got in, you could still get out now for about 12 bucks, right? So much, much better. And again, you get that one cheap, you use one of these up here, right? You guys can see how far they are. You guys can see the potential in a strategy like this, okay? But again, what is it going to take? You're going to have to do a little bit extra focus, all right? And again, that's where a lot of people, you know, like I said, I've laid all the basic rules out. The one piece you guys need are obviously you need some type of an understanding of where price is stopping and confirmations. But what I'm going to give you guys, again, I mentioned the report to you guys, I'll say it in a sec, but what are your next steps? So what I've shared, there you go. My mouse wheel must be a little bit loose today, right? So what are your next steps in really kind of being able to trade this and integrate this into your trading? Well, the first one is, if you don't have a Nadex account, absolutely, without a doubt, open yourself up a Nadex account, okay? If you don't have a Nadex account, this is not something that you're gonna be able to trade. This is obviously not for you. But if you do have an account, or if you don't have one, sign up for one, get a demo account right now. What you're gonna do next is you're gonna find these, go to these news sites, whether it be, you know, Daily FX, Forex Factory, or MyFX Book, go to the economic calendars and start looking for these high impact news releases, okay? If not, again, you can download the report and that will also show you what some of the high impact news releases are anyway. But what I want you to do is I want you to go in there and start trade them, okay? Now, if you don't have a reversal strategy, if you have no idea, you know, understanding where supply and demand levels are, it is going to be a little bit more of a different kind of a strategy. Again, if you have questions about that, you're more than welcome to reach out and check things on the site. But that's the way you're going to start trading these things. Get out there in demo mode, see if you're able to start kind of hitting these things and see if it starts working for you. Now, the news analysis report that I mentioned before, actually, hold on, I got one question. Let me make sure I got it. Where can you find event info for indices and commodities? Well, great question, okay? If you guys didn't hear that, they said, where can they get event info for indices and commodities? Well, Forex Factory has it, Daily FX has it, and so does MyFX Book. Crude oil is on there because, again, it's a market mover. Okay, for the indices, it's the same thing. Think of it this way. If the United States Central Bank changes interest rates, will that affect the indices in the United States? Will it affect the stock market? Absolutely yes. Okay, so most of the major high impact releases will also affect the indices. Now, will they move them as much as currencies? No, not necessarily, but they will also affect them. A lot of futures traders are very kind of anxious with this because they're like, oh no, I'm a futures trader, not forex. Well, guess what? There's currency futures, so you should be trading it as well. Again, it's by far the largest market in the world. If you're gonna, you know, if you're worth your weight in salt as a trader, you're gonna understand what the currency market is and at least how to take advantage of it. But don't hesitate. Again, commodities and indices are on the same exact pages because if they are large enough, they are considered market movers. All right. So, with that being said, let's go to the news report. So, some of you may already have this if you attended the last one of these, but basically what I did is I created this news report. It started off as kind of just an endeavor to be able to give you guys an easy kind of printable kind of thing, you know, put it on your desk to trade these news events. If you're brand new to news events, it ended up becoming a 56-page kind of mini book, like an ebook, right? I've never even thought about it before, but it turned into 56 pages. I broke down all the different currencies and the news releases that matter. I talked about what the average moves are during the news releases, as well as kind of what you're looking for in a 30-minute and a 4-hour. No strategy, but basically it's meant as a resource guide. It's absolutely free. You guys are more than welcome to download it. Just go to nadex.keeptradingsimple.com and basically put your email address in, and it basically emails you a copy of it. Guys, do what you want with it, but like I said, I have it on my desk. I found that it was very helpful for me putting it together. I've been trading it long enough that I'm kind of familiar with what they are and what the averages are anyway. But I do find that it's definitely helpful to find out what matters and what doesn't matter. Because, like I said, there are a lot of news releases up there, and these are the averages. And just knowing how much something misses can also help you kind of dial your time down of how much you need to focus on it. All right. So with that being said, if you have any additional questions or you do need a reversal strategy, you're more than welcome to reach out. I handle most of the emails personally. I basically handle all of them personally. But the website for me is keeptradingsimple.com. You can check us out on Instagram. I do post a lot of these parabolic retracements. So if you're on Instagram, do me a favor, go over there and look for keep.trading.simple and go ahead and give us a like or a follow. Again, I do put a lot of these parabolic retracements up there and I talk about news. We are on Facebook. We do nightly broadcasts as well on Twitch. We have a Discord channel. If you like getting in there, joining the community and talking about trading, my guys over there are extremely active. Or the old-fashioned way, it's obviously not mail, but it's email, right? support@keeptradingsimple.com. So with that being said, thank you so much for joining me today. If anybody has any other questions, I'll answer them real quick. I'll stay on the line for just a few minutes if you have anything. But besides that, you guys can head over to the website, grab the free, grab the free report if you like it. And let's see, what do we got here? You're so welcome, Mac. I appreciate you being on and asking questions and stuff. It's definitely helpful. Let's see, they trade the reaction, not the news. Absolutely. All right. You're welcome. Absolutely. Yes. Yeah, it was my pleasure. Absolutely, Keith. Definitely, guys.